The divide continues to be extremely wide, so wide that they postponed the meeting today between President Biden and McCarthy until next week.
A new development in the ongoing debt ceiling talks between the White House and leaders on Capitol Hill. The group met on Tuesday. There was little movement in the talks. And now we've learned that the second planned meeting, which was set for tomorrow, has been postponed. A White House spokesperson tells my colleague, NBC News' Peter Alexander, staff will continue to work together and the principals will meet next week.
President Joe Biden and House Speaker Kevin McCarthy have so far failed to reach an agreement on how to handle the U.S. debt ceiling. Biden wants to unconditionally lift the government's $31.4 trillion legal borrowing limit to avert a historic default. McCarthy and other GOP leaders want the government to slash trillions of dollars in spending cuts before agreeing to any sort of deal.
Hello, traders. Gary Wagner here. It's 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 12th day of May, 2023, and this is the Weekend Review. Although gold has traded lower over the last 3 consecutive days, it remains well above $2,000 per ounce, with gold currently fixed at $2,015.60, basis the most active June contract, putting it down $4.90 on the day. The largest contributor this week to the decline in gold was dollar strength. The dollar gained approximately 1.5% in trading this week, opening on Monday at about 101, with the dollar index currently fixed at 102.54 after factoring in today's advance of 0.67%. Lastly, silver had a decline today, nothing like the 5% we saw yesterday, but still it declined 1.1%, a total of 29 cents, taking the most active July contract to $24.13. Although gold is closing lower on the week, we did make a couple of trades this week. On Monday, we went long at $2,028. Initially, we had a stop at $2,009, but on Wednesday, after the CPI numbers came out and we saw a tremendous rise, we then saw it fall and we took our stop to the market, getting out at $2,043.80 for a profit of $1,580. However, I felt that the move down was an over-exaggerated downside move, so we re-entered the market at $2,040.60 with a stop at $2,031. That stop was hit for a loss of $960. So over the week, we netted $620 per COMEX contract. Although gold closed lower on the week, we did see a pattern in which when we look at the upper level resistance line that we created from this asymmetrical triangle, we can see that for the most part was a level of support even as the market ran to lower pricing. The fact that it held above $2,000 is also significant, and I am looking for support to come back into the market at roughly 2015. In other words, I am anticipating that gold will firm and actually open up higher come Monday as trading begins next week. If in fact we're correct and we form a base and move higher, I think that gold could easily hit a target of $2,046, a technical level based upon a series of tops, this one here, as well as some activity that we saw earlier this week, which means that if gold holds this current price point and begins to move higher, we will look to position ourselves from the long side with expectations of an exit strategy at approximately $2,040 to $2,045 per ounce. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you after the weekend for the next daily update and review. Bye-bye. If you like our report, remember to like, share, and subscribe to our channel.